Today, we're diving into a real industrial heavyweight, SCG. They're a massive player in chemicals, cement, you name it. But hold on, this isn't your typical story about a big company just doing business. Nope. This is about a giant that's being squeezed from all sides and is trying to pull off a pretty radical transformation. So let's get right into it.
And right out of the gate, I want you to remember this number, 4.7. What is it? Well, that's their net debt to EBITDA ratio. Now, you don't need to be a finance whiz to get this. It's basically a health check on how well they can pay off their debts. And while 4.7 is a whole lot better than the 6.3 they were at before, it's still pretty high. It's a sign that there's some serious financial pressure here. And really, this one number, it's the key to understanding everything they're doing right now.
Okay, so before we get into the big pivot, we've got to understand where they're starting from. Let's take a quick look at how they've been performing lately. And what's super interesting right off the bat is that there are some really positive signs. Take a look at this chart. You're seeing the sales volume for their main chemical products. We're talking polyethylene and polypropylene, the stuff that makes everything from plastic bottles to car parts. It's up a healthy 16% year over year. So what does that tell us? It tells us that even with all that financial stress we just talked about, the core of their business is actually really strong. It's growing.
So where's all this stuff going? Well, pretty much everywhere. They export to over 100 countries. But if you look at the breakdown here, you can see where their heart is. Almost 40% of their exports stay right there in their backyard, in Southeast Asia. Then you've got big chunks going to Japan, Oceania, and China. It's clear they are a major player in the Asian market.
But, having a strong business and a global reach doesn't mean you're invincible. Not by a long shot. And right now, SCG is basically sailing right into a perfect storm of challenges. Let's unpack the big ones. And man, it is a complex picture. First, you've got rising trade protectionism, especially in places like India and Indonesia. Then, they're tied up in some ongoing legal battles in Indonesia. On top of that, a whole new wave of stricter regulations for sustainability reporting is about to hit them in 2026. And all this is happening while they're restructuring internally, which, always causes a short-term hit to profits. It's literally pressure coming at them from every single direction.
So what do you do when you're getting squeezed like that? When you're in that perfect storm? Well, you don't just batten down the hatches and hope for the best. You re-engineer the entire ship. And that is exactly what SCG is doing. Let's break down their transformation plan.
First things first, they went straight for the debt. Check this out, a net debt reduction of over 32 billion Thai baht. That is a huge move toward getting their finances in order. And of course, when you reduce your debt, you cut down on those killer interest payments. In this case, they've saved themselves 193 million Thai baht. That's cash they can now use for other things. And all that financial discipline, it leads to this, stability. They are now sitting on a solid cash position of over 50 billion Thai baht. This gives them breathing room. It gives them the firepower they need to actually make their big plans happen. Now, this isn't just about slashing budgets. It's a really smart three-part operational overhaul. Step 1, sharpen their focus. They're pouring resources into high-growth markets, especially Vietnam. Step 2, get lean. They're restructuring and selling off assets that aren't part of their core mission. And step 3, and this is crucial, they're shifting from just selling basic commodity chemicals to creating high-value, innovative products. So think less about bulk plastics and more about specialized polymers for things like medical devices. The bottom line, they're getting smarter, leaner, and way more focused. Okay, and this is where the story, for me, gets really interesting. All of that financial cleanup, all that operational tightening, it's all been to power their biggest transformation yet, a full-on pivot to sustainability and green growth. And I want to be clear, this isn't just some glossy PR campaign. This is at the absolute core of their entire future strategy. And they're not just talking a big game, they're putting real numbers on the board. You can see it right here in this chart. Their greenhouse gas emissions are already heading in the right direction, down. And the goal is incredibly ambitious, a 25% cut by 2030 and hitting net zero by 2050. These aren't just vague promises, these are serious science-based targets that are forcing them to fundamentally rethink how they do business. So the big question is, how are they going to do it? Well, the first piece of the puzzle is energy. They're aggressively switching to renewable sources, like using biomass from farm waste to power their factories. That's a huge deal for an energy-hungry industry. Second, it's about what they actually make. This ties right back to that shift to high-value products, but now with a green twist.
They're innovating products based on the circular economy, making plastics that are way easier to recycle and building out entire low-carbon supply chains.
Third, they're betting on the future with some seriously cutting-edge tech. We're talking about carbon capture. They're building partnerships to scale up technologies that can literally grab CO2 emissions from their smokestacks and either lock them away underground or even turn them into new useful products.
And finally, their strategy goes way beyond their own factory gates. They're actually working with communities on massive reforestation and environmental rehab projects. They're creating natural carbon sinks to help balance the scales. So when you put it all together, the financial discipline, the smarter operations, and this deep, deep investment in sustainability, it all boils down to their new mantra, inclusive green growth. It's not just a tagline. It really is a perfect summary of their new identity. So let's recap. SCG has managed to stabilize the ship, they've navigated that perfect storm of global pressures, and they've drawn a very clear, very ambitious map for the future. But the road ahead? Well, it is anything but a straight line.
And that leaves us with the one big lingering question. They've made this incredibly bold bet. A bet that sustainability isn't just about doing the right thing, but that it's actually the main engine for their future profits. So, in this crazy volatile world we live in, can this massive industrial giant's green pivot really power its next chapter of growth? That's the multi-billion-dollar question, and honestly, they're betting the entire company on the answer.